Okay, so the first step to finding a trade requires finding a market that is tradable, a market that has volatility that's moving. We need the markets to go up a certain amount or down a certain amount to get that price change in order to find profitable trading opportunities. So that's what we call volatility. It's very important. Now, the way that we time volatility is kind of a unique concept to us here at ATS with our software, with our methodology. You're not going. What I'm about to show you is not really talked about, this type of method, but we've simplified it. It's built into the software. This is going to be extremely helpful for you timing the market and looking for profitable trades right when the market's getting going. So, how do you do it? It's really simple. Like I said, I'm going to try to keep these very simple and clear and concise so that you can start implementing the strategy right away. The way that we time volatility on any market that you're looking at is simply when you get a new white dot starting a new white line. These are called expansion lines. What expansion lines mean? It means that the market has followed a certain algorithm in our software, and when you get that line, that's your first indication that the market is about to leave this general price level right here. If you look back in history, every single time you get a white dot, whether you're coming out of a box or you get one without a box behind it, you're going to move from that price level. So we do get into some tight ranges here and there, but as a general rule, you can see even in a tight range, we do move away from these levels. Okay? So what you want to look at is when you get a new expansion line on your larger time frame chart. This is important right here. You want to look at the larger time frame chart. When you get that new expansion line, that means that this larger time frame is going to become tradable very soon. It means it's about to move. So if the question I'm going to pose to you right now to get you thinking is that if you're right now I have a 4-hour into a 15. If you know that your 4-hour chart is about to travel from a general price area up or down, then you know that there's a high probability that you're going to get several hours or even several days of price travel away from these white lines. As you can see, this is the most recent one. We had the expansion line, and since we got it on this candle right here, we've done nothing but travel up. Same thing right here. We had an expansion. We had a run up and then a run back down through the line. It held that price level, and then you can see it just traveled all the way down here. So these are nice runs on the 4-hour. All this volatility is tradable. So anyway, the basics of that, like I said, is that when you get that new white line, that is a signal that this market is about to explode. Right here, here's another example. You came out of the box, that signaled an expansion, came up, and then we came back, tested that expansion line, and then just exploded. Again, all of this is tradable. It's exactly what we're looking for. Okay, so that is the basics. That's the first step that you need to take when deciding which market to trade. Which market is close to an expansion line on the larger time frame. Now, if you're using the daily time frame, and let's just say you're looking for longer term trades, let's say you're trading the daily into the 4-hour or the daily into the hour, using an hour for entry. It doesn't matter. You want to time that volatility with the larger time frame, because if you can almost guarantee you're going to get that movement, that volatility on the larger time frame, then it's going to be much easier to find trades that are significant on the shorter time frame. Another thing I want to stress is that you want to, when you get that white line, you want to start really getting aggressive when you're close to that price level. You can see that this has already ran up. So right now, this volatility, it could keep going, but you've already gone so far. So timing the market is you're going to want a time when you're still close to these levels. The farther away you get from that expansion line, the less and less probability you're going to have with your trades. So anyway, hopefully I kept that it's a very basic concept. You'll get familiar with this as you use ATS software. You'll start to see the power of timing this volatility this way, and it's going to really help you. One more thing I want to talk about on this is the question, does news play into timing volatility? Okay, a lot of traders sit around and they're just basically they're news traders. They're waiting for news to hit, big numbers like NFP, non-farm payroll, GDP, things like that to come out for whatever currency that they're trading. And you know, a lot of traders think that that is the start of heavy volatility. I'm going to tell you right now that those news announcements can for sure cause volatility. They can cause rapid price movement, but that price movement at those times is going to be much less predictable than watching the price play out organically with the expansion lines. You need to think about news as kind of like pouring gasoline or nitrous on the fire. You're kind of it's gonna go through the normal expansion that it always goes through. The news is just gonna kind of hurry. It's gonna speed it up. So my recommendation, you can do whatever you want, but my recommendation is to actually take it easy around high volume news announcements. And I'll tell you, the best trading you're gonna get is days where you have light news and you get new expansions, or you've had a new expansion on your larger time frame. You know, and there hasn't been a lot of news. That's where you're going to get the smoothest price movement and the most predictable trading opportunities. Anyway, so don't want to ramble on too much on that, but that's the basics. When you get a new expansion line, that means that this market is becoming very interesting, and you should probably start looking at it. You can also storm watch. You can have your larger time frames up on a few different pairs if you want. I have the pound Aussie up right now. You could have it on the euro dollar, the dollar CAD, doesn't matter. But you can look for these pairs that have just had that expansion, and those are going to be the ones that you really want to pay attention to, because again, you get that expansion, there's a high probability that we're going either up or down from that price level, and you want to be ready to get a piece of it.